All right, welcome in everyone to another deep dive.
Yeah.
Today we're going deep on Amazon.com,
The one and only.
ticker symbol AMZN.
Yeah.
And you, our amazing listeners, sent in a really interesting collection of materials this time.
Oh, yeah.
Yeah, we've got some really recent market analysis. We've got late March 2025 stock performance data and a whole bunch of expert opinions. So our mission is to, kind of cut through all that noise and try to extract some key insights about where Amazon is at this point in time and what the trajectory looks like.
Right, yeah, Amazon. It's a behemoth. But, in today's, I guess, kind of dynamic economic landscape, everyone's facing shifting tides. Even the giants.
Right, even the giants.
So, just looking at that late March 2025 snapshot, one thing that jumps out at me immediately.
Yeah, and the stock was kind of navigating that $189 to $193 range.
Oh, right.
But what really, I guess, caught my eye was that there was this noticeable short-term dip. It was trending slightly down over the past month and even year to date.
Yeah.
But then, if you zoom out to like the one-year view,
Sure.
it's still positive. So
Yeah.
it's like, the recent market weather hasn't completely erased the kind of longer-term sunshine, I guess you could say.
Right, right. Short-term dips, they can be noise for sure. But I think the fact that the one-year performance is still positive, it kind of suggests, some degree of underlying resilience, right?
Yeah.
But it's always worth kind of digging a little deeper into those day-to-day fluctuations. Like you mentioned, that drop to 192.72 on March 27th.
Right.
That kind of single-day move, that often reflects kind of immediate investor reactions to news or just broader market sentiment, maybe?
Absolutely. And it's hard to just completely ignore that over 7% negative return in the past month. The past year delivered 6-7% growth. That's great.
Right.
But it is underperforming the S&P 500. And that kind of begs the question, are there specific headwinds impacting Amazon more than the broader market?
Right, exactly. So is it sector-wide pressure on tech, or are there company-specific developments that are maybe weighing on investor sentiment? I think that's kind of the critical question.
Yeah. And then looking back, that one-year high of 242.52 back in early February 2025, that feels like a distant peak compared to where we ended up in late March.
Yeah, it does.
Right. So it really highlights that pullback. But then on the other side, that 151.61 low from August 2024, that's a pretty good reminder that this stock has seen some pretty significant volatility.
Yeah, for sure.
And it's crazy to think about that IPO price.
Oh, wow.
The equivalent of just 7.5 cents after all the stock splits.
Uh-huh.
That really underscores what a long and remarkable growth journey this company has had.
Right.
So let's talk about these technical levels. We saw support around $190, resistance near 200.50.
Right.
What does that mean for someone who's watching this stock?
Well, think of them like potential battle lines, So that 190 support level, that's an area where buying interest might intensify, which could prevent further declines.
Right.
So if the stock consistently holds above that 190, that could signal continued buyer confidence. But conversely, that 200.5-year resistance, that's a price point where selling pressure might increase.
Okay.
And a sustained break above that could actually suggest renewed bullish momentum.
Gotcha.
So I think a lot of traders, they watch these levels closely just to anticipate potential price swings.
Right, they're trying to get ahead of it. Okay, well, let's move on from the technical stuff and talk about some of the news that was shaping the business.
Sure.
Q4 2024 results, those were strong. You'd think that would be a positive, but then that Q1 2025 sales forecast came in just a little bit below what Wall Street was expecting.
Yeah.
So what's the dynamic there?
Well, I think this is a perfect example of how forward-looking the market really is. Strong past performance, it always sets a high bar for expectations going forward. So even a slight shortfall in that Q1 forecast, it suggests that maybe some external factors, like what they call foreign exchange headwinds, which is basically just fluctuations in currency exchange rates that impact international sales and calendar shifts. So that's just like the timing of holidays or business days, that kind of stuff that affects sales periods. All of that is having a more pronounced effect than maybe they initially anticipated.
Okay.
So, yeah.
And it's interesting how analysts react to that kind of stuff. Even with that slightly tempered outlook, firms like Jefferies, they largely maintained their buy ratings.
Right.
Some did adjust their price targets downwards a bit, but it suggests a belief that these are likely short-term bumps, not a fundamental shift in Amazon's long-term potential.
Yeah, I think that makes sense.
Right, and that probably ties back into those broader macroeconomic concerns that you mentioned earlier.
Exactly, yeah. And that continued buy sentiment. I think that reflects just the underlying strength of Amazon's core engines, right?
Right.
If you look at specifics, Amazon Web Services, AWS, that remains just a phenomenal growth driver, right?
Absolutely.
Consistent, strong performance coupled with, this push into new AI services and the ongoing expansion of their global infrastructure.
Right.
I mean, it's really solidifying its leadership in cloud computing.
Yeah. And then, kind of separate from that whole world, you've got Amazon MGM Studios getting control of the James Bond franchise.
Oh, wow. Yeah.
That's a headline. It signals a significant investment in content creation and entertainment, which we know is a crucial battleground these days.
Right.
So what's the bigger picture there strategically?
Well, I mean, if you connect it to their overall strategy, owning a globally recognized IP like James Bond, I mean, that just significantly enhances the content library for Prime Video. So not only does it attract new subscribers, but it helps them keep the existing ones, right? It just makes that whole Prime ecosystem even stickier.
Makes sense.
And I think that's a long-term play, right?
Yeah.
In a very, very competitive market.
It's not all good news, though, is it? There's that lawsuit against federal regulators concerning product recalls, and that sounds like it could be a potentially serious headwind.
Yeah.
What kind of impact could something like that have?
Well, you gotta figure, regulatory challenges, they're kind of par for the course when you're dealing with a company of this size and scope.
Sure.
But the outcome of a lawsuit like this, I mean, it could have financial implications, right? Like potential penalties, the cost of implementing new procedures. It could also impact, their reputation, consumer trust.
Sure.
It all depends on the specifics and public perception.
Yeah, and of course we can't ignore the broader economic picture. There are uncertainties.
Yeah.
And the looming possibility of new tariffs, especially on tech stocks, that seems like a pretty big shadow hanging over even the most robust businesses.
It is, because economic uncertainty leads to reduced consumer spending, right?
Yeah.
And that directly impacts Amazon's e-commerce sales. Then you got the tariffs. New tariffs on goods or components sourced internationally, well, that could disrupt their whole supply chain, increase operating costs, and really squeeze profit margins.
All right, so complex picture. Really strong core businesses, exciting new ventures, but some real challenges too on the regulatory and macroeconomic fronts.
Right.
That upcoming Q1 2025 earnings report, late April, early May, that feels like a critical moment.
Yeah, that earnings call is going to be huge. I think investors are going to be listening really, really carefully for any indication of whether that slightly lower sales forecast was a one-off,
Right.
or if it signals a broader trend. Any updates on that lawsuit, what management says about the economic outlook and the progress of those new initiatives, like the AI stuff, all that's going to be heavily scrutinized.
Okay, so let's shift gears a bit and talk about what the financial analysts are saying overall.
Sure.
The general sentiment seems quite positive.
Yeah.
There's a prevailing buy consensus rating, a lot of strong buy recommendations even. So what's driving that optimism in the face of all this uncertainty?
Well, I think it likely comes down to analysts taking that long-term view.
Okay.
They see Amazon's fundamental strengths, dominant position in multiple large and growing markets like e-commerce and the cloud, proven ability to innovate and expand into new areas, and let's be honest, the sheer scale and reach of their customer base.
Right.
They probably see the current challenges as just temporary headwinds in a much longer-term growth story.
That makes sense. And then you've got that average one-year price target floating around $260 to $270. That's a lot of upside.
Yeah.
It really reflects a strong belief in future appreciation, doesn't it?
It does, but it's crucial to remember that those are just averages. Right. I mean, there's a pretty big range in those price targets. We saw some as high as 306, even 321.3 them, but then there were lows down at 145 and even 203. I think that widespread, it just highlights the inherent uncertainty. And even the experts have diverse perspectives on Amazon's future trajectory.
Right, so the average is encouraging, but don't get tunnel vision. Gotta have that balanced perspective. Let's zoom in on those Q4 and full year 2024 financials, because those headline numbers look pretty good.
Yeah, they did.
10% year-over-year jump in Q4 net sales to $187.8 billion.
Right.
And an 11% increase for the full year, reaching $638 billion.
Huge.
Those are big numbers
Yeah, they are.
for a company that's already this size.
Right.
But what really stands out is that net income almost doubled in Q4 to $20 billion compared to the previous year. That's a massive improvement in profitability.
Yeah, that's a really significant jump. And that diluted EPS of 1.86 in Q4 reflects that increased profitability, on a per-share basis.
Right, so let's talk about those key financial ratios.
Okay.
We saw a price-to-earnings ratio, or PE ratio, in the mid-30s, and a price-to-sales, the PS ratio, around 3.4. What do those tell us about how the market's valuing Amazon?
Well, those ratios offer a glimpse into the market's valuation relative to Amazon's performance. So a PE ratio in the mid-30s, it suggests that investors are willing to pay around $35 for every dollar of Amazon's earnings, right? That kind of premium, it often reflects expectations of future earnings growth.
Right.
And then the PS ratio of 3.4, well, that indicates that investors are paying roughly 3.40 for every dollar of Amazon's revenue.
Okay.
So by comparing these ratios to Amazon's historical averages or even to its competitors, you can get a sense of whether the stock is currently considered overvalued or undervalued.
So we talked about some of the risks earlier.
Yeah.
And it sounds like those macroeconomic factors are a major concern.
Right.
That potential for slower economic growth, leading to reduced consumer spending, and the worries about tariffs disrupting global trade. I mean, that stuff can have a big impact.
Yeah, macroeconomic headwinds, they don't discriminate.
Yeah.
A slowdown in the economy, well, that translates to weaker demand for anything e-commerce related, and tariffs that could increase the cost of goods.
Right. Which affects not just Amazon's direct sales, but the businesses of all those third-party sellers on their platform too.
Right.
And then inflation, well, that can increase Amazon's operating expenses everywhere, from labor and shipping to the cost of the goods themselves.
Yeah, and then there's the competition, which never sleeps.
Oh, absolutely not.
Right. Amazon's competing hard in e-commerce, cloud services, digital advertising, and all those numbers from our sources, they just show how broad that competitive landscape is, even though we only talked about Walmart specifically.
Right.
So what are the different sides of this competitive battle, would you say?
Well, I mean, the pressures are coming from all sides.
Yeah.
In e-commerce, you've got those established brick-and-mortar retailers like Walmart that have built out their online presence.
Right.
But you've also got these nimble, pure-play e-commerce companies nipping at their heels. Then in cloud computing, yeah, AWS is dominant, but they're facing serious competition from other tech giants.
Yeah, and in the world of digital advertising, which is just exploding, Amazon is fighting for market share against some really established leaders.
Right.
So yeah, each competitor brings its own strengths and weaknesses to the table.
So it's not all doom and gloom, right? There are some pretty significant growth levers that Amazon can pull.
Absolutely. AWS, that's the consistent growth engine.
Yeah, AWS keeps chugging along.
It's driven by businesses moving to the cloud and the demand for those sophisticated cloud services. And don't forget their advertising business. That's growing like crazy.
Right.
High margin revenue right there.
And then you've got those more ambitious, forward-looking things like Project Kuiper, the satellite internet venture.
Oh yeah, that's going to be interesting.
And their big investments in AI, those feel like they could be real game changers in the long run.
Yeah, those are potential long-term game changers for sure. Project Kuiper could open up all kinds of new markets for internet connectivity in underserved areas. And then the AI advancements, well, those could revolutionize everything from how they manage their logistics and supply chain to improving customer experience across all their platforms.
It's really fascinating how they're integrating AI into so many different parts of their business.
Right.
Both the stuff that customers see and the behind-the-scenes operations. That seems like a smart move for driving efficiency and personalization.
For sure. AI can power personalized product recommendations, optimize those massive warehouses and delivery routes, enhance voice interactions through Alexa, and even automate a lot of internal processes.
Right.
So ultimately that means cost savings and a better customer experience.
And if we compare Amazon's stock performance, that 6-7% return over the past year, to some other major tech companies like Apple who've seen stronger growth, what does that say about how the market is viewing Amazon right now?
Well, it could suggest that the market thinks other companies have better short-term growth potential, or maybe that those macroeconomic headwinds and competitive pressures, they're seen as having a bigger impact on Amazon's diverse businesses compared to companies that are more focused.
Right.
And I think comparing them to other e-commerce companies like Walmart, who have different growth drivers, I think that highlights the differences within sectors.
Yeah, you also pointed out that Amazon's price-to-sales ratio is higher than average, which could indicate a premium valuation.
Yeah.
Does that suggest that the market still has really high expectations for future growth, even though it hasn't been reflected in the recent performance?
It's possible, yeah. A higher PS ratio can mean that investors are willing to pay more for Amazon's revenue because they're expecting a big jump in revenue growth or a substantial improvement in profitability down the road. But it also means the stock is more sensitive to any signs that this growth might not actually happen.
Okay, so let's bring it all together. What's the overall expert view for the rest of 2025?
Well, it's generally optimistic. They see Amazon as a solid investment with a lot of upside potential based on those analyst price targets.
Right.
The idea of it being a safe harbor in uncertain times is interesting too.
What do you think about that?
Well, I think that safe harbor idea probably comes from the fact that Amazon has so many different revenue streams, e-commerce, cloud computing, advertising.
Right.
All that provides a degree of resilience in a volatile economic environment. Investors might see their dominant market positions as safer compared to companies more exposed to specific cyclical trends.
Yeah.
But the market right now is volatile, that's for sure.
Yeah.
Trade tensions, inflation, all that stuff can still create headwinds, even for a company as big and diverse as Amazon.
Right. So it really all comes down to how well the company executes the broader macroeconomic climate and investor sentiment, which is always changing.
Absolutely. So many moving pieces.
Yeah, so many moving pieces to keep track of. So for our listeners out there, I think the big takeaway here is that Amazon has this really interesting duality. Incredibly strong foundational businesses, exciting growth opportunities, but they're also facing some significant near-term economic uncertainties and intense competition across all their major businesses.
Right. And I think the key thing for listeners to remember is that, yeah, the long-term picture looks good based on what analysts are saying,
Right.
but you got to be aware of that potential for market volatility and the risks we talked about.
Absolutely. Not a simple investment.
No.
So one final thought for you all out there, something to chew on.
Right.
Given Amazon's massive reach, I mean, they're everywhere.
There.
And they're involved in so many different businesses. How might some completely unexpected technological breakthrough or some crazy global event, how could that create some really big impacts on their future growth? Stuff that goes way beyond the economic factors we've been talking about today.
That's a great question. I mean, it highlights how unpredictable the future really is. And how a company like Amazon, with its size and scale, it's both shaping the world and also potentially vulnerable to those sudden shifts in the global landscape.
It's definitely something to think about. Well, thanks for joining us on this deep dive into Amazon.
Yeah, this was great.
We'll catch you next time.
See ya.